Good afternoon, I'm Will, I work on the dealing desk here at Capital Spreads, and I'm joined by Bill Hubbard. He's going to shed some light on this week's happenings, and tomorrow, which is a big day, non-farm payroll. But let's start off with BOE and ECB rates decision just come out unchanged as expected.
Yes. I think what's going to be quite interesting, and I think the Q&A probably has just started, because as we saw today, the euro 136.60, right? Now, if you can remember back to late October when it got to 137.20, which was a 2-year high, I feel that predicated the surprise move by the ECB last month to drop rates 25 basis points. Now, the key is going to be is negative interest rates, LTRO. I still think we probably got a 10 basis point rate cut, but not till the first quarter.
So that high 2-year high rate was making the Eurozone uncompetitive?
Yes, very much so. And I mean, I think it's quite interesting because if you look at here in the UK, I mean, we've got sterling above 162 and going higher. And as we saw, Mr. Cameron has just got back from 3 days in China talking about trying to do business in China. Well, anybody who looks at it, I mean, we do more export business to Belgium than we do to China. And believe me, 162, 163, that is not going to help our export business here in the UK.
So what might they do to bring down the sterling? Because that's all-time high, well, sorry, not all-time highs,
yeah.
Relative highs in the last couple of years against the dollar.
Yes, well, I mean, one of the things that's negative for sterling, but positive for everything else here in the UK is, the economy's growing, we can almost maybe see 1% growth in the fourth quarter. So that's helping growth. That's not helping sterling. It's a situation where it's been helping the FTSE, it's been helping IPOs, etc., etc. So the key thing here, and where I feel, a lot more positive here in the UK than maybe I did before, is I see the communication between Dr. Carney and Mr. Osborne very, very good. I mean, today's autumn statement really, we sort of knew what we were going to talk about, but the key thing is so many of the things that was mentioned here, Mr. Carney has mentioned either off the record or on the record, and even since July, he's basically showing that there is a phenomenal communications, which will be overall positive for the UK economy. Whether it's overall positive for sterling, I don't know.
Great, so the autumn statements today didn't tell us anything we didn't know.
No.
So hence the markets didn't move.
Well, excuse me?
What did you take out of it? Anything interesting at all?
Well, the thing I felt positive about, okay, and although I'm not a veteran here in the UK, I'm a veteran in the States, and I was quite pleased that some of the money from some of the most recent fines for the LIBOR rigging, who cares what the money is, at least $100 million is going to be going for, quote, help the heroes or help returning troops from Afghanistan. I thought that to me was extremely positive.
Nice thing to do.
Yes.
Yeah, good. So normally at this time of year we're talking about markets rallying. It's a sort of fairly notorious thing now, the sort of December rally. It's not started well.
Well, I think it's not starting well, and we've talked about this before. I mean, if you go back to January of this year, whether you were looking at Bloomberg or whether Reuters and talking to all the gurus, I mean, most of the gurus' expectations for most of the global stock indices, they were reached in the end of May. So it's almost been sort of on borrowed time. So what I see happening here now, whether it's concern about Fed tapering, whether it's the end of the year, I mean, we're seeing some fairly sizable profit taking in some of these positions that have been extremely profitable. I mean, if we talked back in January, February, I mean, Tesla in the US, well, it's up 147%, and I mean, Twitter and stuff like that. So there's nothing wrong with taking some money off the table, making sure your balance sheet looks good. The key is going to be is how we start the new year. And my feeling is, we've known for 6 months that we're going to get tapering. I still don't believe, even if we get a 250 or maybe even 300,000 number tomorrow, we already have had one 300,000 number already this year in non-farm payrolls. All I think you'll do will predicate the simple fact is more clarification on, quote, forward guidance, and also make sure that it is a dovish statement. Because, I mean, my feeling is we're still not going to see interest rates in the States go up until late 2015. I think interest rates will go up here in the UK maybe as early as the second quarter of 2015. And when we say early, I mean, that's still 18 months away. So my feeling is that and also the concern, and I know you're not supposed to look, but I mean, as soon as this tapering starts, as soon as it becomes official, I mean, we've seen what's happening with the Indian rupee, when nine-year lowest since 2009. I mean, the South African rand is getting clobbered. It's in Indonesian rupee. So as soon as this, it becomes more definitive, we'll see a massive rally of the dollar, maybe for the wrong reason. But for emerging markets, this is going to be horrendous. And some of those emerging markets are still in, quote, the Eurozone.
Yes, yeah, absolutely. I think we're certainly seeing more interest in the markets at the moment, possibly because there's a lot of information flying around, particularly at the end of this week. Are you finding them difficult to decipher? Are you finding it difficult to reason why they're going off? You say people are taking profits, but this is not the time for profit taking. Historically,
I mean, from my standpoint, both from thoughts and ideas. I mean, you see how positive the IPOs have been here in the UK. There's some very good stocks here in the UK that I like. One of the things that we are seeing this year, unlike the previous, from like 2000 to 2009, when all you had to do was buy commodity-related stocks. You didn't even care. It was XYZPQQ.com company, and it just went up and up and up. So if we get a level where gold becomes a buy, commodities become a buy, then you can see a massive follow-through in some of the mining or gold-related or commodity-related shares. But the simple fact is that it's been a tough market. I've had to change my feeling in the past 6 weeks to be more positive on cable. I think sterling euro has been a good trade, although we're fluctuating around the 83 level. I think one of the best trades that we've seen this year, and we've been talking about, although we picked up probably late on it, we didn't really start looking at it until June, was sterling yen. I mean, this could go 165, 170, 180. I mean, it's already up 20% this year, but that's a great trade. I'm still, would be short the euro. I'm concerned about the Aussie dollar because even the Reserve Bank of Australia is saying, well, this is really what we want. Maybe the market was feeling about FX intervention. But I mean, I think what we're going to do is start the year off with, whether it be that by default or not, we will see strength in the dollar. I feel the European Central Bank will probably have to drop rates at least once in the first quarter. I'm not sure about these negative.
So weakness in the euro, strength in the dollar.
Yes, and with each movement up in the dollar, it's going to be an incredible hit for, well, we saw yesterday. I mean, one of the problems that we see in the Eurozone is deflation, disinflation. My feeling is maybe the first thing Mario Draghi should have done was call Venezuela last night. Their inflation now is only 54%. Sort of, hey boys, how are you doing? We need a lift here. But I'm very, very much concerned about the disinflation, the deflation. How it's going to be an extremely negative drag on the Eurozone, in 2014.
Now we've got a lot of clients who are long the FTSE. We've also got a lot of clients who are short the American indices. There's a bit of a gap to emerging between those two indices. Why is that? Why is the FTSE performing so much worse?
Well, I mean, for the simple fact is, look how many IPOs we've had this year, and look how many positive IPOs, so Merlin, Royal Mail, etc., how they've just gone up and up and up. And I think that's one of the reasons why sterling has been so strong. You've got foreign investors. I mean, Qatar, so they bought, a bucket load of Royal Mail shares. Well, they have to, exchange the Qatari DRAM into sterling. So that has been a positive. My feeling is, once we get, and we may get it tomorrow, where we get a definitive feeling that March is going to be the beginning of quantitative easing, be prepared. We could have a massive, massive move, okay? You still have close to $30 billion in bond-related funds in the States. If they feel that interest rates are going to start going up, and you've seen a number of those funds, and especially the second and third quarter, go into equities, okay? So you could have, there is a ton of money on the sidelines. If everybody starts believing Bill Gross said we get 3.25, say on the 10-year. So that could be a positive from internal, and then if we start getting any external stuff into the States from around. But I mean, my feeling being is that, I would expect most of the arbitrageurs, or I'm not, maybe speculators is the wrong word, but these are the people that are in and out, you know, they may have gone into the trade before we started talking to be out of the trade by the time we finish.
Sure.
So, you know, I'm positive on here in the UK. I'm positive in the States. We've already reached record levels before we had some profit taking. And you've got like the Nikkei. I mean, the Nikkei's up like 24-25% so far this year.
Yeah.
I mean, I know it's not back to the 47,000 that I knew 25 years ago, but I mean, we're starting to see money moving out. And the key is going to be is if we start to see a rise in permanent employment. I mean, although we have, you know, our unemployment level is very low and getting lower, but remember, almost half of those people are either temps or on these no-pay contracts. And, you know, so you've got, you know, a lot of people in this country, and even in the States. I mean, where I'm concerned a little bit in the States, you know, if you have 1 in 6 people in the States, you have 50 million people in the States that are living at or below the poverty level. You know, that's very frustrating.
It is. So, other than that, Bill, I think we're probably should start wrapping up. We've got a last message. What would your trade of December be?
Have a Merry Christmas.
Have a Merry Christmas. Right.
Enjoy Christmas, enjoy the New Year. And, you know, it's going to be a situation where I think we can at least have the first quarter of next year talking about when we're going to have, will the tapering officially start in March, and when will the ECB drop rates at least by
hopefully we're done with it, you know, all together.
Yeah.
Yeah. Okay, great. Thank you very much.
Thank you.